Sonora, Mexico, northwest Mexico, and we discovered, permitted, financed, built on time, under budget, and operated the mine next door.
Right.
And we sold that in late 15, and this asset's 25 kilometers away. So the first part of that story is that we've done it before, on time, under budget. We know the people, the community, we've got a license to operate. Part two is that we've got the third highest grade primary silver deposit in the world. Okay. So when silver prices aren't doing that well and you've got economics that...
that's quartile.
Yeah, exactly.
Right.
So that's there. The third part is what's left on the upside. We've been able to hit on about 70% of our drill holes, and our finding cost per ounce to date is 25 cents.
Right.
So those are the three main things. And like I said, I did mention that we do have our preliminary economic study that came out last week. It shows that in the first 4 years of production, we'll be able to produce an ounce of silver at less than $5.
Right,
so here we are with half the industry struggling to make any money. We're going to have roughly $10 margins at today's prices.
Which is incredible, right? Okay.
And we've got a payback period of 9 months.
So that leads on quite nicely to finances. Why don't we cover some of the basic numbers for the company?
Sure. So, I mean, one great thing is we have 33 million Canadian in cash. We've got about 4 million in warrants coming year. That covers us for about a year in terms of our budget. In that economic study, we need 100 million US of capital. And again, at today's prices, that's roughly a 9-month payback.
Right.
So again, the big majority that's going to be in debt. So it's not much equity or any equity left on that point. In and around today's prices, we should have a 78% IRR and a 9-month payback.
Right.
So one of the beautiful things for people who are not really trying to pick their timing on the market is we did a downside scenario case in that study. And is if you use 1,100 gold and $14 silver, we still have a 64% IRR, and our 9-month payback goes to 11 months. So again, if you look at where we are as an industry and where the cycle is, and if you look at our ability to withstand that downturn, and then look to what the upside is, a retail investor, knowing that you still have an 11-month payback at $1,100 gold, you can buy this stock. And again, there's still risk related to mining. I'm not trying to downplay that at all. But you have a much better resilience to how long this cycle changes. And then your upside is something you get with the drill bit, commodity prices changing, and then potentially many people would say that we're a potential takeover target given our robust economics and defensive characteristics.
Right. What's happening next? Where's the value come from for new investors coming into this story?
The best analogy for that is our one key area within our mine is extremely high grade. It's the first ore we're going to access in production. Our first drill hole into that area was 3.5 meters wide at 8.5 kilos. And obviously we got excited. We threw 4 drill rigs at it, and 4 months later we had 40 million ounces at over a kilo. So, if you look at the PEA that assumes 13.7 million ounces of production in each of the first 4 years, if you assume roughly 15, 16 million ounces are needed to get those 13.7, if you can find 30, 40 million ounces of high grade in a short period of time, I mean, that conversion to free cash flow, again, 13.7 million ounces in the first 4 years, that's 115 million of free cash flow per year. And our market cap today is 270 million.
Right.
So the speed of finding high grade can move the needle very, very quickly on the drill bit.
Of course, but that's ifs and buts. So what are you guys doing to ensure that, or as much as you can?
Well, we've got 15 drill rigs on the property today, and that's one of the bigger drill programs out there. Half of those drill rigs are trying to convert the resources to reserves, just to increase the confidence and remove some of that risk of having more tangible belief that it's there and we can control it and understand that. And then again, the other 7 are looking for new ounces. The beauty with us is we're actually a small mine. It's only 3.8 million tons are in our PEA. So even if we find some lower grade ounces, maybe there's the potential to go from 1,250 tons a day to 1,500, 1,750 and see how it plays out. We made sure that given a 78% IRR, if people don't believe your inputs, the thing goes in the garbage. So we wanted to make sure we started out so people can go, here's a snapshot in time, here's what it's worth, we believe you, or we're going to make our own adjustments and come up with a number. and everything is kind of gravy, hopefully.
Yeah.
And that number today is trading at about 0.65 times our net asset value. December of 17, we had $3 million on the balance sheet.
Yeah.
So we've been slowly making sure we pick up that cash balance. What we're doing in the asset, again, doing infill drilling to make sure we have confidence in what we have in place. Making sure we're communicating with shareholders all the time, and we've got a very strong shareholder base. I mean, most of these shareholders were my old clients in an old day, so just making sure that communication and trust and transparency is there.
In terms of strategy, I'm talking about, obviously not technically, but in terms of strategy, are they talking to you about what they think you should be doing in terms of creating a bigger entity? Because your market cap is good, it's like $300. That's pretty impressive. But I think from what you're saying, you feel it could be more. So are you frustrated with the performance, or you think it's okay?
No, if you look at our performance versus the GDXJ, which is an ETF for junior miners, I think last year, that GDXJ was probably down about 20%, while we were up 150%, I don't know the exact number. So it just shows that, again, while the gold and silver prices are low, we've shown that we're a vehicle that can add value, and that's mostly been via the drill bit. Right. So what we're getting from our investors is, we'll give you the latitude to go out there and drill like crazy, because again, that's what's been driving share performance. So the bigger and broader we can just make this asset in terms of either, again, leverage tons or high grade, that can move the needle very, very quickly.
Any M&A planned? Or have you got enough on your books?
I think our shareholders would be very happy if we put our head down and focused on this asset and did not get distracted. Right. Any M&A things that we'd be interested in are very much things in the neighborhood, $2, $3, $4 million that might be something close by that we can truck to our existing, and get that economies of scale sort of thing. And again, we've been in the neighborhood for 13 years. So knowing that all those things are available, and it's everything very low cost, but very potentially high return. We're longer term, if you said 5 years from now you're in production, you've got a bunch of cash on the balance sheet. If the market was still soft, maybe we've had a vehicle that could re-rate cash, and we could be able to self-finance future development and grow this company while other people weren't necessarily in that position. And if the market turns 5 years from now, maybe we've actually enjoyed that downturn to accumulate those assets and build a bigger, better, stronger company.